Hi, this is Andrew Berman from National Mortgage Professional Magazine. Thank you for joining us for another DealDesk. We created DealDesk because, listen, there's a lot of great products that wholesale lenders have been creating that are allowing mortgage brokers, third-party originators to really get really more creative with their borrowers. So we've been partnering up with various different lenders. If you probably caught the last one we did with Angel Oak, it was a very successful webinar. Today we're doing a bank statements program, and with that I enlisted the folks over at FundLoans to do this. But I want to just tell you, so we do have a bunch of questions that have already been submitted. But if you do have any questions that you want to still ask, we still have some time left to be able to ask these questions. You're going to send them to webinars@mortgagenewsnetwork.com. That's webinars@mortgagenewsnetwork.com. And we will do our best to get to all of your submissions, and any scenarios that we do not get to, because we got a lot already in, and we try to consolidate as much as we could, kind of consolidating the questions. But any questions that have not been answered, we will answer. I should say, FundLoans will answer directly. So I'm going to tell you a little bit about actually our presenter. We have Austin West, who is the original 3 account executives that's been with FundLoans since it started. FundLoans is a super jumbo non-QM wholesale lender. Austin has just done an unbelievable job of showing mortgage brokers throughout the country how to use this product. Austin, thank you for joining us.
Good morning or good afternoon to my Midwest and East Coast people. How are we doing?
We're doing fantastic. Here in New York, it's a beautiful day, almost probably as nice as it is there in Southern California.
I don't think anything beats San Diego, but we can try.
You know something? You got me there. You guys are consistently the best weather in the country. But listen, Austin, can you do me a favor? Just tell actually our readers a little bit about FundLoans.
Yeah, absolutely. So you guys, great intro. Appreciate that. FundLoans is a non-QM jumbo to super jumbo wholesale lender. And the entire reason we started this company was to really focus on these self-employed bank statement programs. Our minimum loan amount is $400,000 and we can go up to $15 million. And everything in that gap we can do with bank statement lending. So what we found, our owner, and we can go into the history later if anyone wants to talk, but had a huge need because he used to run a retail branch himself for these super jumbo self-employed programs. And there wasn't a lot of different things out there to offer these borrowers. So what we were able to do is went out and we signed up, a handful, 5, 6, 7 different hedge funds that'd be able to take on this type of lending. And that's what we made our niche. So our entire goal is to be able to provide as many options as we can in the bank statement realm, show our brokers how to originate, go find the business and how to get it done, and be sure to be a resource for all these self-employed borrowers that need these super jumbo type of loans that can't use tax returns.
Fantastic, man. I love it, man. I love the approach. I love what you guys are doing out there. Listen, I had the pleasure of meeting you guys at NAM East, I guess about a little over a year ago. And it was one of these things where you got to see actually the brokers, hearing, with excitement, the products that you guys have put together for them. But listen, I want to get right into this. Let's go into some of these scenarios that were submitted to us. So, all right, our first one, we got a real estate business owner, bank statements. They're 100% owner of a real estate business, no rental history, 716 FICO, purchase price $700,000. How's this deal look to you?
Everything about it's great. I mean, 100% owner makes it easy. 700 plus FICO, you're going to be in a great pricing range. The loan amount, obviously, on the lower end of what we're capable of doing, so that fits great. The one thing here that sticks out to me is the no rental history. So all of our guidelines do state if you can't prove any rental history, have no prior ownership, you can only do those as a full doc type scenario. However, there's always caveats or exceptions we can make. Let me give you an example of something we've done recently. So we had a borrower that had no recent rental history, but he owned hotels. That was his business. So because he'd never owned his own home, he wasn't renting for the past decade, it was because he was living out of his hotel. So although that isn't, by technical standards, what qualifies him, we're able to get that pushed through because we, proved it makes sense that he's living here. So we're not going to have rental history because he'd be essentially renting from himself. Does this work? As long as we can tie it together and make it make sense, we're going to be fine. Obviously, those are one-off situations. Not all your borrowers are going to be hotel owners or such. But if we can prove in some measure or standard that you have had some sort of rental history, even though we can't document it, that's how we can overcome something like that. If we truly can't document anything to make it make sense with rental history, unfortunately, that would be like a full doc type scenario.
Fantastic. Awesome. And something, before we go any further, I want to take a temperature for the room to see actually, how often are people that are on this webinar right now, how often are they coming across the bank statement program? So everyone, if you can, grab your mouse and just answer this quick poll here. Tell us actually, from your prospects who have qualifying income, but just due to their structure of their business, it becomes a little difficult to qualify with the traditional lender guidelines. So I'll give a couple of seconds to kind of let everyone participate in this. Looks like we got 38% of people voted. So anyone else? Come on, join in. No, we can get this number up to over 50% here. Put your phones down. Come on, let's do this. All right, there we go. 52%. Beautiful, beautiful. All right. And all right, last chance in 5, 4, 3, 2, 1. Beautiful. All right, so let's see. What do we got here? So it looks like we have 64% of the people sometimes. We have the 18%, most of their prospects. So we have 18%, most of the prospects, and the 18%, a lot of their prospects, and sometimes for 64%. So, and I wonder actually, not to digress here, but do you guys provide any kind of assistance on helping, your mortgage brokers that are doing business with you, help them, generate more of this kind of business?
Yeah, absolutely. So a nice little thing we put on our website, actually, on our FundLoans YouTube channel, is our owner does these little, 1 to 3 minute sessions called Mortgage Minutes, where he sits down with, I think we're at 15 episodes now or something, with a whole lot of different people that a lot of LOs or originators might not even think about that you can generate business. So what John Maddox, our owner, does is he sits down with them, talks to them about where they're getting their referral sources. So we're sitting with CPAs, divorce attorneys, bankruptcy attorneys, all these different avenues where these people are consistently working with self-employed borrowers that need to use bank statements and don't even know that those programs are out there. So why not go to the source? These CPAs and divorce attorneys, these are the people seeing borrowers all the time. So it goes a lot further than just those examples. So you can always check out our YouTube channel. Just type in FundLoans and you'll see a whole lot of videos on how we actually instruct and coach and show our brokers different ways to go out there and originate these bank statement type loans.
Yeah, but by the way, that is some of the best video content in the mortgage industry. So well produced, I loved it. So definitely get over to their YouTube channel, check it out. So listen, I'm going to go on with the questions here. So bankruptcy. This is a tricky one. Bankruptcy seasoning 7 and 13. Do you look at them differently? Major credit scoring events, short sale, foreclosure, etc.
Yeah, so tricky on the surface, but not tricky to us. So all of our seasoning requirements we can even do with bank statement lending, and we can do it 1 day out of any credit event. So as long as foreclosure, short sale, any deed in lieu, as long as those are settled events, we can do it 1 day out. If we have a BK a 7 or 11, we can be 1 day out as well. as well as a 13. So it doesn't really matter what the credit event is. We only need 1 day seasoning. Where it comes in is really what we're trying to do, right? So anytime we're typically looking at 1 day out, we're really less than a year on any of those events. We're going to be maxed at like a 70 LTV on a purchase or rate term and like a 65 LTV on a cash out. But you can still do that with bank statements. If we're looking at like a Chapter 13 bankruptcy, you can do a grade A as long as it's 1 day out of discharge, which means you have no restrictions on those. So a lot of these credit events that you've had borrowers face between 2010 and 14, I think was the largest area of it. We have different programs that fit all of our bank statement lending needs. And even if you're, say you're 3 years out, we can still get you as high as like an 85 LTV on those scenarios.
Wow. Awesome. Fantastic. All right. Next question. Full doc and bank statement. Can you do full doc and bank statement income combined?
Yes, but let me explain. So we can't do it with the same borrower, but say you have 2 borrowers on file. Let's just make it easy. Husband and wife. Husband owns his own business, wants to use his tax return, or can't use his tax returns because he's, let's say a realtor. So we're going to use 100% of his income going to his personal account. But the wife is full doc. She's a nurse, works for the hospital, whatever it might be, and she needs to go full doc with it. But the bank statement we're using is the same. So they have a combined bank statement, W-2 income from her, and then we have his self-employed income going in. The way we do it is it's priced and looked at as a bank statement loan, and we use her full doc income with pay stubs and W-2s to support, but you still do not need any tax return information or a 4506T. So we'll document her, again, with pay stub W-2 supporting evidence, and then we'll just calculate his bank statement income like we usually do, and that's the way we go about combining full doc and bank statement income on the same loan.
Bam. I love it. Awesome. Fantastic. All right. Next one. Self-employed documentation. Regarding being self-employed, what kind of documents do you need to prove that self-employment?
So there's a lot of different ways because, every self-employed borrower might be up against something different. Some don't use CPAs or a tax preparer, right? So that's one avenue is we can get a CPA letter, a letter from your tax preparer verifying that you've been self-employed for 2+ years. Let's say your business is small enough to where you don't have those readily available. You do your own taxes. Great. Let's look at the next step. What does your business do? Do you have licensing bureaus or state documentation you filed with a state showing that you registered your business? It's an active standing business. That's another way we can do it, right? Or like a licensing bureau. You're a realtor. You don't really have a CPA. You can do your own taxes, but your realtor license you got 5 years ago. To us, that shows your self-employment. And even to go a step further, we had a borrower once that didn't have a CPA, didn't have a licensing, but they ran their business solely through a website. So what we used for them, we did a website verification. Website has been up and running for 5 years. We get verification they've been earning income for 2+ years. So again, it made sense and we're able to tie it together. So the easiest way, obviously, state documentation or CPA verification, but there's always little things we can do to think outside the box because obviously all self-employed borrowers aren't the same.
Yeah. Awesome. Fantastic. It's like you guys are trying to find any way you possibly can to say yes to these guys, to the borrowers.
Yeah, and I mean, that's the non-QM space in general, right? Is everything in what we do is supposed to be outside the box. We don't underwrite like a bank. We underwrite like a private fund. So everything is, quote unquote, manually done. If we can build out these explanations and truly make it make sense, and you're going to hear me say make it make sense a lot on this call, but that's really what this stuff comes down to. Can we prove their income on bank statements, and can we tie in whatever their self-employment is to make it make sense? If we can make those two things happen, and we'll get into how to calculate it later, I'm sure, but it's really that easy, is how can we explain this to make it make sense to the investor or whatever program we're going to, and that's really all it takes.
Fantastic. Beautiful. All right. So limit on income, business bank statements, one has multiple partners, shopping center, how much income can be counted? Some have a limit of 4 owners.
Yeah, so this is where it gets a little trickier. This kind of rides that line of exception basis. A couple of our programs do require you to be 100% owner. A couple of them will let you do it at 50+% ownership when we're talking business bank statements. Whenever we're going personal side, you can be 25% or more owner. But with that being said, whenever you have 4 owners, and say it's 25% even across the board, there's not one of the 4 who's like a majority. It's 80%, and then the other 3 split it, and that 80% has controlling ownership, but that's not the borrower we're talking about. That's a little tricky because then they really don't have control of the financial assets, over the funds, the business direction. But let's say in this specific scenario, we have those 4 owners and they're 25% across the board. If we can make the income qualify, it's a strong file with compensating factors, then that's an exception that we have had done in the past. So the way we calculate that type of income is, let's say their expense ratio for the businesses is going to be 50%, and that's what we have for qualified income. We'll then take 25% of that 50% qualified income, if that makes sense. And as long as the borrower qualifies with that, that is an exception we have done in the past. It's just not written in the guidelines. So again, if it makes sense that they're split owners and you can still qualify using only 25%, then yes, we can get those done.
Fantastic. Great, beautiful. So I do see a bunch of questions coming in. We've got 3 more questions, and then we're going to go to our live questions. We only have 10 minutes left. I always like to keep these under a half hour. We run a little bit over, we will, but I definitely want to keep that close to the half hour. So the next question is cross-collateralization. Do you allow for cross-collateralization?
We do, but it's actually a no document cross-collateralization type loan. So that really doesn't fall in the bank statement stuff. It's a non-owner occupied program where if we have 3 or more properties and they all debt service, we can attack it that way. But when we're dealing with bank statements alone, we do not offer a cross-collateralization bank statement program.
Fantastic. All right, credit events. Do you allow for credit events on the bank statement programs?
Yeah, kind of like we touched on a little bit earlier. Got actually pretty in depth on that one. We do. So we even one day out of any credit event, we're able to do a bank statement loan. All that it really is going to determine is based on your credit grade on the program we fall into. And all the credit grade is going to determine is really what our max LTVs are relative to your FICO and whatever that credit event is. So easy answer is absolutely. We can do bank statement programs or credit events. Just based on what the credit event is going to determine what our max LTV is based on the seasoning of that event.
Wonderful. All right, we got one more question, then we're going to the live questions. If anyone wants to squeeze in a question, send your scenario to webinars at mortgagenewsnetwork.com. Webinars plural at mortgagenewsnetwork.com. All right, next one. Calculating qualifying income. What is needed to calculate the qualifying income for the bank statement loans?
So I know we're running short on time, so I'll try to be brief on this answer, but this is probably the most in-depth answer. So if you guys do have any more questions, even if it's not a direct scenario, feel free to email it out as well if you want me to touch deeper on this. But right now, we have a multitude of different ways to answer or to calculate the qualifying income. The most commonly used one we have is going to be a CPA expense ratio letter. So all we do, there's no bank statement worksheet or anything. There's no P&L involved. We just simply have, it's like a 4 to 5 sentence type up. Your CPA, verifies that they've been doing your taxes. They verify you've been in business for 2+ years. And then they just tell us what your expenses are in the way of a ratio. So they'll put, the expense ratio for the business is 0.25 or 25%. We're simply going to use 75% of those deposits. And this is where it makes it a lot easier than doing like a P&L or something, is we're not looking at the full expense profile. We're not doing a deep dive. What we want to know with that expense ratio is what is the absolutes when we're coming to the expenses on a bank statement loan, right? Let me give you a quick example. We had a truck driver. His absolutes are his gas, his repairs and maintenance on the vehicle. His non-absolutes are he pays $200 a month for a cell phone tower in his truck, right? That's more of a convenience, not a guaranteed expense that directly applies to his business, but he's going to write that off on taxes, right? So with this expense ratio, we just want to know what is the bare bones, the absolute type of expenses that are unavoidable to run your business, and then we create the expense ratio around that. Another way is we can do a borrower prepared P&L. So it's all borrower prepared. P&L matches the 24 months bank statements you submit. Another direction is 3 months of business bank statements supported with a 24-month CPA prepared P&L, right? So the point is, and we have 2 other ones too, and those are a lot more in depth as well, depending on the bank statements we need. We have another borrower prepared program called an annual earnings summary. We actually create a fillable form for you. So all they have to do is go and fill in the blanks, the drop downs. So the long story short kind of answer here is we have enough ways to calculate income based on really how it's going to be determined on the scenario and your borrower, because not every single way is going to be the same. That's all business side. When we're looking at personal side, 100%. Super easy. We're going to take 100% of those deposits minus anything that doesn't make sense for your income, like you sold a house or a boat and you had one large deposit. Obviously, those are excluded. But on the personal side, everything else we're going to take 100%.
Got it. Awesome. Fantastic. All right, last question, then we're going to go to some live questions here. My inbox is filling up here fast. We're definitely not going to be able to get to all these questions. We'll everyone that did submit a question, FundLoans will get back to you. So rehab construction, can this program be used for rehab or construction loans?
Not directly. That really falls in that fix and flip, hard money, commercial type realm. We are a residential primary lender. However, if you're looking to take cash out using bank statements on one of your properties, and then the cash out's going to be used, for a rehab or construction on a different property, or you're using cash out on that property to even rehab that one, and it's in a good enough condition, a C4 or better on the appraisal, to where it's good enough to pull cash out and then you're going to rehab the subject property, that's allowable too. But a true construction rehab loan using bank statements, that just kind of rides on that hard money, fix and flip commercial realm to where we don't really dive in. But we have had scenarios where we can do it on other or subject properties, and then you use the cash out, using bank statements to get the cash out to do those kind of fixes and rehabs.
Fantastic. All right. We're going to go to the live questions right now. Here we go. We got 7 minutes to bang out as many as we can. All right. I'll do rapid fire. What is the max LTV?
90%.
90%. Awesome. What is the max DTI?
50%.
Okay. Fantastic. Covered that one. So max loan that you'll do with bank statements?
We can go up to 15 million.
Okay, 15 million. Fantastic. What is the max loan amount that you'll do? Oh, no, sorry. Can you do commingled bank statements?
We can. So anytime we have commingled bank statements, we're going to look at it as a business type bank statement. So it's not a problem, it's commingled. It's just when it is, we're going to apply some sort of expense factor like we talked about, rather than taking 100% like we would on personal. So we can do it. We just look at it just like we would a regular business bank statement type scenario.
Fantastic. Great. All right. Next question. So how do you qualify in order to use the bank statements for income? I think we kind of answered that already, right?
Yeah, we can be a little bit more direct with it because it's very easy. You just got to be a self-employed borrower. So as long as you're self-employed 2+ years, we are good to go. And to do a little deep dive on this further, you're 1099, you're a realtor. A lot of people don't think they're necessarily self-employed, but a lot of 1099 borrowers out there, even if you're working for a different company, but in a way that is self-employment type income, even though you might not have started your own business, those are the type of things we're looking for. So are you considered a 1099, self-employed, contracted? to where we can make it make sense to make it look self-employed, and that's really all it is. 2+ years of self-employment.
Great, fantastic. All right. Regarding being self-employed to qualify, what kind of ownership is required? I know you went into that, but if you want to dive a little deeper into that, I'd appreciate it.
Absolutely. So, our guidelines state 100% for we're going business on a couple programs. Some we're able to do with 50% plus. Anything if it's a business and we're under 50% ownership, again, as long as it makes sense, those are good exceptions we can do with compensating factors. On the personal bank statement side, 25% or more owner of a business. That's really all we're looking for on the personal side.
Got it. So, all right. Are there any types of deposits that will not qualify?
Yes, there is. So a lot of times you'll see, like I had mentioned earlier, you have large deposits because you sold a boat or a home, or you sell items on Craigslist or eBay on the side, or you have a loan request that you got, a private loan that was wired into your account that when we end up sourcing and seasoning it, it's not really income. It doesn't really match what your business does. Those are the type of things that we're going to disqualify, because what we're really focused on is what are your minimum expenses to run your business and what are all your deposits relative to the business. So anything that falls outside of those, we're not really going to consider income.
Got it. Fantastic. So are there any types of businesses, or that you will not get involved in?
That's a little tricky. It's anytime we're dealing with like your casinos or cannabis, any of those things that are still on a federal level, a little riskier on the lending side. Obviously, we see the direction of those moving forward to where it is getting a little looser. We don't see a lot of those type of businesses in the first place. A lot of them know they have to go more the hard money route. But I'd say cannabis is probably the most often one we see. Especially being in California and the West Coast, where it is becoming more prevalent. Those are the types that we're dealing with currently that we're not able to do.
Yep. All right. And next question, can you combine self-employed income with benefits such as Social Security for the same borrower? And if you want, actually, we're going to wrap it up on that. So we can close it out. I want to make sure people you have time to give your personal contact information. So we'll make that the last question. And anyone else who asks questions, FundLoans, Austin, or someone from his team will get back to you directly. So last question. Can you combine self-employed income with benefits such as Social Security for the same borrower?
Absolutely. So it's actually quite easy. So we just calculate the business income as normal, and then all we need is 2 months proof of deposit and whatever your award letter is from the state for whatever benefit we're dealing with, disability, Social Security, POD on somebody else's beneficiary, whatever it is. State documentation showing that the award is supposed to go to you, and then 2 months proof of receipt, and that is it, to use that on top of your bank statement income.
Awesome. Fantastic. All right, Austin, we're going to wrap this up so we can close this out right on time here. So what's the best way to get a hold of you if someone's looking to get signed up with FundLoans?
Absolutely. So our phone number is going to be 760-388-5888. I know email is a lot easier for most people, so you can always email info@fundloans.com. That goes directly to our entire team of account executives, so you always get a quick response, and we'll be able to get to you very quickly if you reach out to that phone number or that email. And yeah, that's the easiest way to get in contact with us.
Awesome. Austin, thank you so much for taking the time to help educate our readers about your bank statement program. I really appreciate all the great things you guys are doing and the great innovation and products to help put more borrowers in homes and make the mortgage broker the place to go for funding.
Absolutely. Thank you so much for having FundLoans on today.
All right. Take care, Austin.
Have a great day.
All right, and that concludes this webinar. Thank you so much for joining us for another DealDesk. We have a couple of other ones already lined up on the schedule. Stay tuned to your inbox or National Mortgage Professional magazine to learn more about it. And thank you all very much. Have a great day.